It's a big problem.
What are some of these forms, and when do you have to file them?
Okay, now this is a problem too, because many CPAs who do tax returns just kind of miss this, because the FBAR is not a tax form. It's a treasury form, but it's not part of your 1040. It's filed, it must be filed by June 30th of the following year, and you send it off now. It's an address in Detroit. And what they'll do is they'll log it in, and depending on what you've disclosed, they will then transfer the information to the appropriate agency in the government. And so if they think you're funding terrorists, or if you're a drug dealer, they might send it off to that branch. If they think that you didn't pay your full income tax, they'll send it to the other branch. And those are the people that will decide whether there should be a big penalty or a little penalty, and whether or not they want to audit your returns.
Oh boy.
So that's the FBAR,
go ahead.
Which is filed completely separately from your tax return.
And that's the TD 90-22.
It's a TDF 90-22.1. It's called Report of Foreign Bank Accounts. I'm sure you can't see it, but that's the headline on the thing.
And now this form, by the way, all these forms you can get at the IRS website, which is www.irs.gov.
Yep.
And but if you think that you may need to file these, as I said, well, at least get together with a tax return preparer, and if you have several years maybe back that you should have filed, maybe a good idea to get together with a tax attorney.
Right. In fact, as I go through all of these, there are several ways of dealing with the unfiled returns, and you may want to deal with a lawyer because of the attorney-client privilege.
Yes.
So if it's a potential criminal sanction, and in fact, that's why I came back professionally as a lawyer. I had a client call me up that had one of these problems.
Oh my gosh.
And so I decided, well, I better be a lawyer this time. And, and now, these are tough problems, but I don't know if you want to go into that, how you do make it up and how do you fix these things. There's something called a soft disclosure, and there's something called a hard disclosure. And the hard disclosures are really hard.
Okay, why don't we get started? Why don't we go ahead and finish going through these forms here.
Okay, here, another important form. Well, by the way, there is one form that's now been beefed up on your 1040, and that's the Schedule B, and that's where you report interest income and dividend income, and they ask you, do you have an interest or signature authority over a foreign bank account, disclose the country, and they refer you to the form, this TDF 90-22.1. They also refer you to the form 3520. So that is one that you should not overlook. If you don't fill this in, there's a big penalty.
Right, and the problem is that when people see these questions, they'll skate by them.
Oh,
they'll
boy.
think, oh no, couldn't apply to me. And they're not really thinking about it.
Right.
And so this is a little question you need to put some thought into. If you do have any dealings offshore.
Well, I'll tell you one, and in fact, the 3520 is another form. If you are the beneficiary of some foreign trust. Now this, I had a fellow come in my office. His grandmother died. He was born outside. He's a U.S. citizen, but his grandmother still lived in Europe. She died, and she set up a bank account that he's the beneficiary of. And she put it in his name, and he didn't even think about it. It was not a big account. It was like $60,000. Well, he should have been filing this. He also should have filed a Form 3520, which requires that you disclose if you are the beneficiary of a foreign trust. It also, you must disclose if you get a gift. The gift, there's a threshold, I think it needs to be $100,000. But if you're the beneficiary of a foreign trust, or if you've set up a foreign trust, if you did business with a foreign trust where you made a gratuitous transfer in or out, meaning you sold some property worth $200 to a trust and you only charge them $150, well, you made a $50 transfer to that trust that should be disclosed that you're transferring to a foreign trust. Big pitfall in this area, the people that buy real estate in Mexico and find out they can't hold it directly, and they have to form a trust and put a little bit of cash in there, and they're making $10 of income on the interest, and they should have been disclosing on a 3520 that they have a holding interest.
So this is like beachfront property.
Yep.
And the Mexican government doesn't permit you to hold the property directly, so you have to hire a bank to be the trustee for you to hold the title.
Right.
And people think, I just bought a house.
Right.
That's all.
Yeah, yeah.
This is what they told me I needed to do in order to buy it.
Yeah, no, it's a big pitfall, and
Yeah.
people don't realize that it's worse than getting Montezuma's revenge, really.
Now this one, as I recall, it's actually due on the same time that you file the tax return.
Right.
And if you have an extension, like to October 15th, then that also extends the date for
That's
this
also
one.
extended, right. And that one's, again, missed many times by the CPA. The CPA's,
They don't know,
they've got
skate.
so many things to worry about, and then
Yeah.
they forget this. In fact, I wrote an article not too long ago. It's like impossible to be a tax return preparer now because there's so many things to miss.
Oh, it's easy to screw up.
It is easy to screw up.
Yeah.
And then another form that, people just get stuck on this one all the time. It's a very important one. If you own an interest in a foreign corporation, and it doesn't need to be a real big interest, but if you own 10% or more, and you're an individual or you're a corporation itself, and you have a subsidiary or related party, you need to file a Form 5471. And the same horrible penalties, $10,000 a year, up to $50,000. And you have to also report all your transactions with it. Now, I'll tell you one. I had a fellow in my office not too long ago who was an inventor, a creator. And he had shared his technology with some folks in a foreign country. And they said, gee, Charlie, if you'll write us a check for $10,000, we'll give you a third of our company.
Yeah.
Well, he never filed a 5471.
He didn't have a clue.
Had no idea. And now he just sold his interest for millions of dollars.
Oh my gosh.
And I said, well, you're going to have to file a 5471 because if you have a change of interest of 10% or more, you have to file and disclose. And I said, by the way, you never filed 6 years ago. And they said, oh, well, my God, what's going to happen? And obviously, my guess would be that if he files that late 5471, the IRS isn't going to waive the $10,000 penalty. I mean, here's a guy's making millions of dollars now, so he's going to be in trouble. He's probably going to have to pay the penalty and will beg for mercy. And begging for mercy will work, but you have to be credible, and you're dealing with the criminal enforcement division in many cases, and you can imagine they've heard every story.
Yeah.
And this is like getting your teacher to believe that the dog really did eat your homework, and it's not that. You got to have a good sad story.
Yeah. And the problem with this, though, is that we're not talking about IBM here when we're talking about owning an interest in a corporation. This can just be a small business interest,
right?
That you own overseas, or that a person overseas owns over here.
That's a 5472.
Okay, so
if somebody abroad owns an interest in a company here, they better file a 5472.
Yeah.
And by the way, this will mean something to you, probably not to anybody else, but this is where you disclose your Subpart F income.
Okay.
These are your related party transactions. You're also tipping them off on intercompany pricing issues. I had some folks here not too long ago sell their company, and they were from another country. They were here, and they'd been here. They're good U.S. citizens. They never realized that the corporation in their foreign country was subject to this filing requirement. Now they're selling their company, and the buyer says, you have to certify all filings have been made. Well, they're at risk for quite a few thousands of dollars in potential penalties.
Yeah, scary.
And it is. It's
So,
not fun.
Anyway, so there are these compliance things. If you have any dealings offshore, you need to be sure that you're talking with somebody that's familiar, and so a lot of times your local CPA,
Right.
he just works on domestic stuff, and he may not be aware about these requirements.
Right. And they're criminal sanctions too, so you got to be careful with this stuff.
So you've already talked about, maybe you can hit a few other points. How can you inadvertently be caught with these requirements? So one of them, you mentioned, though, is just the sale of your interest. That seems to bring up
a sale of your interest, 10% or more of your interest. You go up or down, you got to disclose it. Here, I'll tell you, again, I have a woman who was named as the executor of her father's estate. Her father never lived in the U.S., was not a U.S. taxpayer, had no investments in the U.S., and his bank account was in Switzerland, as it turned out. Well, that's got to all be disclosed. She now has a signature authority over an account, even though she didn't own it, and the account was not a U.S. taxpayer. She's a U.S. taxpayer, and she didn't realize she should have disclosed it. And this estate's been closed for many years, but it's still within that 6-year statute of limitation period. So she's inadvertent. She's very worried. What should she do, this poor woman?
So it sounds like, though, if you're named as a trustee or an executor, maybe you should think about whether